Hey, and welcome to FiscalVoyage. My name is Felix, and in today's video we're gonna find out how to find the intrinsic value for Apple stock. And in this video we're gonna use the Philtown rule number 1, investing. You could also find Philtown channel on the description. I provide a link to his channel. It's a great channel to follow for new investors and all investors alike. So what we're going to cover in this video is a spreadsheet that I created that you could download in the link in the description below, as well as my free ebook. And in this spreadsheet, I did all the numbers and the calculation and such, where all you got to do is plug it in. So I'm going to show you how to plug that in and get through these numbers. But basically, we're going to cover the return on investment, the sales or revenue growth, the earnings growth, the equity or book value per share growth, as well as free cash flow growth. And Philtown likes all those to be at 10% or higher for the 5-year, 10-year, or 1-year growth rate. And we're going to also find the intrinsic value for Apple stock to see if it's a good buying opportunity now based on today's market. So if you're new to the channel, make sure to hit that subscribe button. And if you like to make money, hit that like button as well. So let's get started. Alright, so first off, what you guys want to do is go to morningstar.com and then type in the ticker symbol AAPL. And then once you get into Morningstar, you're going to go here on the right and look for key ratios. In key ratios, you're going to go to full key ratio data. And it's going to open a separate window for you. So once you get this window, all you simply need to do is highlight the revenues. And we're going to highlight all the revenues for the years and then go into the spreadsheet. Again, you could download this spreadsheet in the link in the description below, as well as my free ebook. And in the spreadsheet, you're going to go to sales, and we're going to copy and paste that under sales. And then we're going to go into what else we need? We need earnings. Let's get the earnings, and then go there and then copy earnings as well into there, and then book to value or book to value per share. I'm gonna copy that as well. Let's go here, go there, and then now let's copy the free cash flow for Apple past 10 years. So you can see here they've had a tremendous amount of free cash flow. So let's copy that as well. So, and the next thing, return on investment capital. This is Philtown most important metrics. So we're going to go over here, which is return on invested capital under Morningstar, all the way in the bottom. And we're going to copy that as well. And then put that in the top here. Again, fill out the colors here. You can see there, fill out the color, that color. And you can see here, so basically, out of this 10 years, it gets the average for the 10-year average, the 5-year average, and the 1-year average. And then the growth rate for sales, it gets the 10-year growth rate, 5-year growth rate, and the 1-year growth rate. The same thing with earnings per share and the equity or book value per share. Same thing with the free cash flow. It gets your 10-year, 5-year, and 1-year growth rate. And then automatically, Philtown recommendation is the ROIC, the sales, the earnings per share, the equity, and the cash or free cash flow is all over 10% for the 10 years, 5-year, and 1-year. So that's what he recommends, is over 10% for all of those criteria. And then it meets the rule number 1 investing criteria. So you can see here, Apple sales has been on a downturn. You can see here the 10-year sales were at 10.9%, 5 years at 6.2%, and the 1-year at 5.5%. Earnings been good. It meets that criteria. I also set up a conditioning where if it's under 10% or 10, it turns it to red to make it more visual. Again, you could download this spreadsheet in the description below, as well as my free ebook in the same link. And then you can see here, equity has been down as well. The 4 years is at only 4.2% growth. The 5 years is a negative 7.9% growth, and the 1 year is 21%, negative 21% growth. The cash, they have a 5-year decrease, or not a decrease, an increase of 8.8%. That's why it's red. Again, that's lower than the 10 years. Than the 10% margin that Philtown likes to look at. But it is higher for the 1 year. It's a big jump to 24%. So this may be non-issue here. So I actually may consider this as passed. The only thing I don't like right here is the equity. and the sales has been on the downturn. But ROIC, the return on investment, has been outstanding, 28% or 28% average for the 10 years, and the last year has a 27.9% average. So that's very positive. But overall, this right now would not fall in Philtown criteria for the rule number 1 investing. So for the next part, we want to find the fair value or intrinsic value for Apple. And then for that, we're going to go to earnings per share for the 12th month. And then we go back to Morningstar, and we can see here they made $3.28 per share for the 12 months. And that's that $3.28 is diluted or GAAP earnings. Growth rate, we'll go to Yahoo. Again, for Yahoo, just go type the ticker symbol in the Yahoo Finance, AAPL. And then we're going to go over here to analysts. And then we're going to see that analysts have a 5-year projected rate of return on earnings of 12.6. So we're going to put that information here for growth rate, 12.6. Or we could use equity, but equity is in the negatives here. So therefore, we're going to use growth rate. And then historic PE, we just look at the 5-year average PE. So we're going to go back here to Yahoo. And actually, we go to Morningstar and then go to valuation. And you can see here the 5-year earnings PE is around 18. So we're going to put 18 in there. 18. And then the minimum rate of return, Philtown likes a minimum rate of return about 15%. So we're going to put 15% there. And then that is going to automatically fill in these numbers here. So you can see here in year 1, the trailing 12 months, which is this one here, $3.28. And the next 5 years and forward, analysts are expecting about 12.6% growth. So therefore, the earnings per share is growing as well. And in year 10, people can't see that far, but based on the model, Philtown model, Apple is expected to earn about $9.54. And giving that $9.54 times the historic PE around 18, it gives us a price of $171. And then if it was to revert back in today's price, the fair value price for Apple right now should be $48.83. So that's the fair price or intrinsic value for Apple based on the Philtown model of rule number 1 investing. And I also have provided here a 50% margin of safety, which is $24, 25% margin of safety, which is $36, and 10% margin of safety, which is $43. And then, of course, the fair price of $48. And right now, Apple is going for $114.89. So based on that information, we should not be buying Apple because of the overvaluation, because of the Philtown model. It doesn't meet the criteria for the Rule 1 investing. The sales are under 10% for 5-year and 1 year. The equity is under 10% for the 10-year, 5-year, and 1 year. And the cash, I would give this a pass, even though the 5-year is 8.8%, but they've made it up tremendously with the 1-year growth of 24.6%. So the cash is good, gives it a pass for me, but the sales and equity is where it doesn't really meet that criteria for Philtown rule number 1 investing. And again, of course, first off, the fact that it didn't meet the criteria here, you shouldn't even look at this because it's not one of the investment Philtown would invest in with these numbers here. But I just continue with this. We looked at the earnings, 12 months, the growth rate, the history, and the minimum rate of return. Gives us a fair price intrinsic value of $48.83. And obviously, as you see here, at 114, it looks like it's double the price of what it should be worth, around $50. And then you have the margin of safety of 50%, 25%, 10%. So overall, Apple looks to be overvalued. I think is also overvalued based on other metrics and what I've seen. But I just wanted to give you this rundown that Apple fails the rule number 1 investing based on Philtown. There you have it. Those are my my thoughts on Apple right now, as well as the spreadsheet. You could download it in the description below. That's the rule number 1, investing on Apple stock. And you could use the same steps that I did for any stocks that you're interested in. Download the free spreadsheet, and also, Morningstar, you get that key data ratios for the 10-year mark for free to get all that information. And then Yahoo, you could go there to find the earnings growth for the next 5 years and use that as your numbers. So I hope you guys enjoyed this video. Again, make sure to download that spreadsheet as well as my ebook in the link in the description below. And I'll see you guys in the next video. Again, if you're new to the channel, make sure to hit that subscribe button and like this video if you'd like to make money. And I'll see you tomorrow.